Right, we're going to kick off with some quick introductions. So Edmund, kick it off.
Hi everyone, I'm Edmund from Prudential. I look after digital partnerships across Asia and Africa. Happy to be here.
Good morning, my name is Jonas Boltz. I'm CEO of Ergo Singapore. Before joining Ergo Singapore, actually I did digital insurance, so I kind of know both sides, and I'm excited about this conversation today.
Good morning, everyone. My name is Rajat. I'm from InsureMO. We are an insurance middle office platform. It's an industry utility platform. I'll talk a lot about it today in the session if I'm given a chance. Thank you.
Hi, good morning, everyone. I'm Tommy from Qoala. So we are an insurtech company that provide the ease of access to insurance across Southeast Asia.
Thank you very much. Now, the topic today, integration of traditional insurers and insurtechs. At one point, insurtechs were going to take over the world. They now just want to be friends. How do we integrate our insurtech friends into traditional insurers? What are examples of how we bridge that gap? Rajat, why don't you kick us off?
Insurer, digital insurer, right? What is the gap here? It's digital. That's it. And what does digital mean for us is tech, right? So carriers have tech, digital insurers have tech, insurtechs have tech, ecosystems have tech. What is the difference? The way we see the difference is carriers have been using tech for so many years. It's become a spaghetti, it's become a legacy, it's become so rigid that you can't change them, right? Whereas ecosystems or insurtechs or digital insurance companies which are born in cloud, which are cloud native, they are composable, right? They have built their enterprise on a composable architecture. Microservices, simple products, simple stuff. Now that does not mean that insurers, traditional insurers can't be digital, right? When we see digital, we don't see simple products. We see even traditional products getting digital. Even traditional channels like Indian Railways. You know, we work with Indian Railways. We issue almost 1 million policies on Indian Railways. That's the most traditional channel that you can think of. How traditional carriers, the big carriers, can work with traditional channels to drive that offline policies into a digital model. That is something that we see as a big gap that we can probably bridge with the help of tech. And when I talk of tech, I don't mean by the old way of carriers taking one core system and replacing it by another core system. The problem here is with the box. The problem here is with the monolith that the carriers have been dragging on for so many years. Where we need to compete is with players like Amazon, with players like Tesla, with players like Google, and they're not built on a box. They don't have a box. They have microservices. They are so agile that they can build things and drive things on their own. So that is where we believe that carriers, if in case they were to go digital, they need a speed layer. They need something which can match up to the speed and the demand which is being asked outside, right? And digital also brings a lot of challenges, right? A digital business sounds very, very cool, very sexy, but the fact is, we define 3 V's, where digital business sees challenges. The number 1 V is volumes. There is no digital business till the time you drive volumes. Second V is variation. When you're digital, you're working with 100 partners, 100 different scenarios, 100 different products. You need to have variations. You don't know what will succeed, what will not. And that has to happen at a very low cost. The last V is velocity. Amazon is not going to wait for 1 month to get a product, right? Grab is not going to wait for 1 month to get a product. So they want things at the speed of light. You want to deliver things in real time, in days, in minutes, in hours. So that is where I believe the tech, which has to disrupt, has to make these ends meet. Insurers or insurtech, for me, it's the same. Every insurer will become an insurtech one day. The only thing is how and how fast can they do that?
And Jonas, what are traditional insurers actually seeking, do you think?
I think there's a lot of potential in the collaboration between traditional players, established players, and insurtechs. I mean, there are so many fascinating ideas. There's so much innovation going on. And I can see, as you said, John, that there's actually a change in the focus of insurtechs. At the beginning, they were much more focused on digital attacking, on disruption. Now we can see that they focus on specific elements of the value chain, be it claims, underwriting, pricing. And this, for us, obviously, is a huge opportunity to create value from collaboration. I mean, one of maybe 3 focus areas I can see from my perspective. First is distribution. So how can we enable our sales partners to provide better services, to provide even more customized offers with the help of technology. Second, of course, automation in claims and ops. I think there are a lot of opportunities with the upcoming generative AI. The journey has just started, I believe. Yeah? So not only to automate, but actually to improve the quality of our processes. And third, last but not least, of course, pricing and underwriting. That's sort of the core of insurance. And if technology really enables us to understand risks better than our competitors do, then we have a real sustainable competitive advantage.
Interesting. So, Edmund, what drives successful collaboration between traditional insurers and insurtechs?
Sure, and just carry on the point there with what insurtechs can do with traditional insurers. I think we just need to be a little bit more selective because traditional insurers in some markets, they are so embedded and have so much legacy that moving with an insurtech at their speed may be challenging. But where we see the opportunity would be when we want to go into new markets that we are not in yet. And I think in situations like this, especially for example in India, we can immediately have access to a distribution network, and without even having to set up that infrastructure is something that traditional insurers would really love to work with InsurTech. And of course, the other one that helps us when we work with InsurTechs is really about feeding our agency force with leads. And so being able to find a way to constantly have that flow of leads, whether it's through the sale of bite-sized products or just some insurance promotions, that will help us be able to increase conversion rates with more data that we can get from the insurtechs about these potential customers.
So really blending online to offline, is that what you're...
Yes, increasing the productivity, because at the moment for life insurance, at least for Prudential, focusing on life insurance, what moves the needle is still the traditional policies that are sold by the agents. The digital policies are still taking a little bit more time to move the needle for us.
Are they moving the needle at all? Sorry, I'm just not clear.
Well, I think the way it moves the needle would be the fact that it's more as a lead.
As a lead.
As opposed
as a lead for your traditional agency force.
Yes.
Excellent.
Right.
Okay, well that's a good first round. But GPT-4 and all the chats, Tommy, how's that impacting the traditional insurers and insurtech?
Yes, I think ChatGPT going to create a very big impact, I would say, across the insurance value chain. I think in particular to drive a better risk management and also the process efficiency as well. So I think on the risk management perspective, ChatGPT can provide a more structured, a more comprehensive, and I would say a more innovative kind of underwriting and product development capabilities as well, right? And sometimes it's not just about like the access to the data, but it's also on how the system actually can process the information and provide the valuable input and so on. I think from the process efficiency perspective, I would say ChatGPT will sort of like potentially can create a new way of customer processing insurance, the way of like customer engage with the insurance from the post-sales perspective, on the claim perspective as well. And I think obviously that can be extremely important considering let's say micro insurance product, right? Where the cost to serve, if done manually, is very expensive. And I think ChatGPT here can play quite a big role here as well to make it more efficient. But in terms of like how this is going to impact, let's say, the relationship between the insurance and the insurtech, I guess in the end of the day, it's also down to the implementation. Right? Depending on the insurance strategy and also I think the capability to implement the solution and the use case, right? Maybe we're going to go into the situation where insurance company will implement ChatGPT more on the risk management product development side. Maybe InsurTech will support more on like the distribution side, maybe on the customer engagement side. And I think one of the main reasons is because there's a lot of like customization required, especially when we try to innovate more and more products, right? But in the end, I would say in most of the cases, again, technology is not the core business of the insurance, and I can see that there's a lot of like value that a technology player, InsurTech company can actually help to drive digital strategy for the insurance company as well.
Is Ergo getting some experience with ChatGPT and?
Yeah, actually, we in our headquarters in Germany, we have set up a team to really explore the potential and the possibilities for that technology. But of course, it's in an early stage, right?
Early
I think
stage.
it's a burning question for all of us, and we have to learn and to see of how to use and apply this technology.
Yeah, it's a double-edged sword, I would say. Obviously, now we're just at the initial stages, the very simple, basic services like how to educate employees about products, or how policyholders can find out more about what they can or cannot claim. But I think the opportunity for us is really about managing our medical business, because we see increasingly to manage the medical costs, we need to provide some form of digital concierge for our policyholders, such that they know exactly what they should do when they have a problem, rather than be guided through a barrage of tests at a very expensive hospital, and just having ChatGPT guide you through that process would be something that would be quite valuable. On the other hand, if everyone can just key in, tell me more about what my Prudential investment-linked policy has and embedded in it, and ChatGPT tells you exactly these are the charges. You're also buying this coverage that are you aware of, and stuff like that, and then that puts everybody's product on a level playing field and very transparent. Then that really forces to innovate quickly to make sure that customers who are now a lot more aware of what they're buying through ChatGPT would want more value.
Interesting. But then the customer still has to understand it, right?
Exactly, true.
Still a problem. Still a problem. Okay, embedded insurance is sort of making a big difference. Rajat, what do you think about what you're seeing coming through the embedded insurance space between traditional insurers and insurtechs?
Again, I think a lot of hype around embedded, right? So everybody talks
Hype,
about
you call it hype?
hype. It's an absolute hype, and hype is not bad, right? Hype is good. But the fact is, there's a lot of clutter as well. Until the time you cut the clutter, you'll not figure out what an embedded actually means. Now, the way we see, we on our platform, we work with carriers, we work with insurtechs, we work with ecosystem players like, auto dealers, manufacturers, telcos, banks, everybody. Now, when we work with ecosystems, which is not the carriers or the insurtechs, everything that they do is embedded. Whether you're buying a car, it's an embedded. Whether you're going on a train, it's an embedded. Everything is embedded. Now, there was a study that came up 2 years back. So the numbers were, the embedded insurance will be a $3 trillion market by 2030. So what I did was, just went on to Google and understood what the actual total GWP globally was. So the total GWP globally, all lines of business, was $6 trillion. So are we saying that embedded is going to create a 50% more market that total general insurance market creates? I don't think so. So where does this $3 trillion has to come, if in case it has to come? So what I believe is it will still come from the traditional products, the traditional motor, the traditional life, the savings, the term, the ILPs, they becoming embedded as part of the journeys when the consumer does their own transactions. That is where, when we see products getting embedded on people like, Tesla coming and talking about setting up an insurance company, Amazon going and taking a stake in Acco in India, right? CVS buying Aetna. So where does the industry move? So that is where I believe the industry is moving in terms of making the traditional products as well embedded. So that will contribute to a lot of embedded rather than embedded coming up and creating something new all of a sudden.
Jonas, you see much on the embedded insurance front with Ergo?
I think embedded is not necessarily only digital. It's really integrating your insurance product offering into the customer journey, right? And of course, there's a huge potential, to really be with your insurance offering where the customer is and smartly integrate it into the journey. But I wouldn't only limit it to very niche digital offering. I think this is not the volume you're talking about. It's really the way you look at the insurance offering as part of an overall customer journey. For example, when you buy a car.
Excellent. Prudential's doing a lot of embedded insurance.
Well, I would say that embedded is just loosely used, but really the powerful factor of an embedded insurance if there's a context for which that product is related to the insurance product that you're offering, and that's typically found in general insurance products. Whereas for life insurance, it's very hard to embed it, with a contextual basis. But do you disagree?
No. I agree.
Yeah.
Is there a difference between embedding and packaging? So
Yeah.
you package with a mortgage product, the life insurance. Is that are you making a distinction?
Yeah, I mean, obviously, with the mortgage product, that would be something that would be helpful. But that we haven't really gotten there yet, because that's really through our bank insurance channels. Yeah. So, I think we're still struggling with, how do we really truly embed something.
I would still say, if you look at life now, if you look at bank assurance, so I would say 20-30% of the life insurance business is still coming from bank assurance. That's a general theme. And now if bank assurance is doing so much of a life, my sense is that it is already embedded. So when you are buying a home loan, when you're buying mortgage, when you're doing stuff, so there is somewhere that kind of an embedding is already happening. While an agent is coming and selling it to you separately, but the fact is there is a packaged offering which a bank already does. Now, how you can make it seamless for a bank to make it embedded as part of their own underwriting of a loan, that's all up to, how do you actually make it feasible for them. But the fact is, I believe that is still an embedding already happening in the life space, and that might just increase the more, we spoke about ChatGPT, we're talking about AI, machine learning, and how fast your decisions can happen, how much of data could be sucked in from these systems, and how you could throw out outputs. I believe, that still will see a lot of embedding happening on the life side as well.
Are you just seeing any embedded insurance on your platform?
Yes. We're actually doing quite a bit of embedded insurance as well. But I think from what we see, the success of running an embedded insurance model has got a lot of dependency, right? I think from insurance side, for example, from the product development, from how we can actually leverage the tech to be able to create the product, simplify the whole underwriting and the claim process as well, right? Because I think embedded, from what we see, are typically a micro insurance product, $2 to $3 kind of product and so on, right? So you need to really leverage technology in order to be able to drive the efficiency in order to enable this, right? I think it's also very much depending on the use cases within the platform as well. For example, Indonesia, I would say digital ecosystem is very big, and therefore there are a lot of opportunities for us to partner with the digital platform to actually sell insurance through the embedded model. But if you look at some other markets in Southeast Asia, they may not necessarily have the similar level of digital kind of ecosystem. But maybe on that kind of market, we work more closer with the traditional players. They're trying to go digital, right? That's how we sort of try to embed the solution with them as well.
Thank you for that. Now, we're coming to the end of the session, so if you've got some questions, pop them on the Slido, and I'll be able to pick them up from here. So I look forward to your questions. Again, Jonas, how do we think about what are the key action steps to ensure successful partnerships between insurtechs and traditional insurers?
Yeah, so I think it starts by defining a successful partnership, and I believe that you really need to create win-win-win situations. So win for the customer, it's the ultimate goal, obviously, from a digital or from an innovation initiative, but also win for the insurance company, and last but not least, win for the insurtech. Yeah, so all sides need to benefit. And in terms of an action plan, what we first do is we really focus on the customer, and really clearly assess the potential of an idea or of an initiative to make sure that we create business value or that we solve a specific problem for the internal or the external customer. If there's a win for the customer, there's the potential of a win for us, obviously, but it does not go automatically. It requires some effort on our side as an established player. We need to make sure that there is the necessary attention on the initiative, there is the buy-in from senior management, because otherwise it will sooner or later get deprioritized. And then for the InsurTech, I think we need to support. We also need to understand in terms of expectation management that there's a different way of doing things. Maybe the processes are less mature, and maybe some of our InsurTech partners might also be overwhelmed by the complexity we have as a large corporation. So I believe it's very important to really navigate them through our corporate landscape to make sure that at the end of the day, it's a win-win-win situation and a successful partnership.
Win-win-win. Tell me, from your experience, what do you need from traditional insurers?
Yeah, so I think from what I see, like it's very important from the very beginning to sort of like set to be very clear on the expectation and the role of like between the insurtech and the insurance company. And obviously the goal here would be we want to be able to co-create, to be able to innovate the new products. We want to be able to try to grow the sustainable business and so on, right? But I guess one of the challenges that we see in the market, especially when we try to roll out a new product, given the new distribution channel, right, is like the ability for us to work closer with the insurance partner to say, hey, let's try to give some flexibility. Let's try to try to do some testing and so on, right? Because in the end of the day, given it's a new model, it's a new product and so on, it's not very easy for us to be able to understand the output, right? We can do our best in terms of like trying to understand the calculated risk, right? Try to really assess that and so on, but the output may not necessarily will be always there. And I think what important for us is like as a tech company as well, we believe in like we need to be able to just try to do it fast, try to learn fast, and try to do a lot of iteration. And I think if you look at the, I would say typically when we launch a product as an insurance company, we're probably not going to do a lot of iterative kind of process, right? And you basically just model it, right? And then just launch it, right? In our cases, we work together with insurance partner to just keep fine-tuning that as we go.
Good, thank you for that. Now, I've got some exciting questions off the audience. Thank you very much for playing. Let me read it out and then someone can volunteer to give a first answer. When an insurer looks at InsurTechs as potential, this is from Anonymous, actually two from Anonymous, thank you. When an insurer looks at InsurTechs as potential partners, what criteria would be topmost? Other implementation, tech, niche, use case, trust, brand? What's the topmost criteria when an insurer looks at InsurTech? Insurers?
Well, I'll go with a left field answer first. I think we've been focusing a lot on InsurTechs from the perspective of helping a traditional insurer with being more efficient and being able to roll out digital products quickly. But if I take a step back and if I think about what an insurance product is, where a customer is buying the product for protection, the insurer is trying to pool the risk, then the natural piece for the third party, which is the InsurTech, would be to manage the risk. So if the InsurTech can help the insurer manage the risk which he's pooling, then we can bring down the cost to protect the customer. So what examples of that? I would say, maybe just previously Thomas, when he was presenting Decadu, how can they manage health risks that we are trying to protect better, and from there, work together to really bring more value to the customer. And there could be others, for example, parametric risks that you can manage, or cyber insurance risks that you can manage, and that's where I see a very strong rationale for all win-win-win situation to come about.
Yeah, I agree. I think less is more. Yeah, so it's not about the quantity of partnerships we do. It's really about the focus to develop meaningful partnerships. In order to have that, there needs to be a strategic fit, and the partnership, the InsurTech, needs to bring something to the table that actually makes a difference or has the potential to make a difference in our core business.
Thank you. Okay, two more. Rajat, I think this is for you. Is the future of embedded only for bite-sized products? What are the challenges and key success factors of successful embedded model?
Absolutely not. As I said, bite-sized products is a very small percentage of the overall GWP. I can give you example from what we see. So we process around $20 billion in premium on our platform alone. Bite-sized products are not probably even 2% of the total premiums. It's very small. In terms of volumes, it might be 20-30%, but in terms of the actual premium, it's nothing. So again, what I believe is traditional products have to become embedded, and they are already getting embedded. So we are looking at motor, life, investment linked, savings, they're all anyways getting embedded. So we are very clearly seeing that all these traditional products getting embedded. I don't see anything new. Yeah, new products are getting created, some unique innovations are happening, but we don't see any volumes coming from them as such, on our platform at least.
Right, no volumes. Tommy, here's one for you. On your point earlier regarding importance of market context, what sort of characteristics would encourage more successful partnerships, embedded models?
Sorry, can you repeat?
What sort of characteristics? What context? Because you talked about content,
Yeah.
Context. So, what characteristics do you think would breed more success?
Yeah, so I think from our side again, like a successful partnership in my field again is like the understanding again between the alignment between the InsurTech and the insurance company, right? And I think like from what I see, one is like really trying to understand the type of product and the type of risk that we want to implement, and like maybe sometimes the risk is not necessarily something that all the insurance company want to go in and so on, right? So really understanding that, I would say, would be one of the very important aspect. Then obviously the second is like from what we see, if you try to run the sort of like product innovation in the industry, it need to be a package. It cannot be just purely on like the distribution side. We also need to think about like the operational, the claim services and so on as well, right? So I would say that would be also very important for us as one of the key success factor as well. Yeah.
That's great. Thank you very much for that. And one more question though. We are a third-layer customer platform building embedded insurance products and work with both insurers and insurtechs. How do you see the role of the platform? That's almost exactly your position, isn't it? How do you see your role?
Yeah, our role as platform, I would say, like we don't see it's obviously we can divide that into multiple states, right? I think the first stage is more of like, how can we identify the use cases for what use cases and what kind of product that can be launched and so on. But it doesn't stop there, because I think what we see after we do the launching, then the next thing is that how we can actually understand on the potential take upgrade, how we can optimize the pricing as well, and how we can try to like gain some of the customer insight, and then try to work together with the insurance partner to try to redevelop the product and so on. And I think typically, like this kind of iterative process, right? We are not looking of like, try to run this for 1 year and then try to reevaluate. We try to look this on the, let's say, on the 3-month basis, 4-month basis as well. And obviously with that, there's also expectation from our insurance partner that you also need to move with that kind of speed as well. But for us, it's good for everyone, because if we are able to optimize that, there'll be a good business. We can manage the risk better as well and so on.
Thank you for that. And here's a question to my heart. Does integration simply lead to M&A, where traditional insurers with legacy issues pick off more successful distribution-centric tech companies?
That's right off your bat. That's right off your bat for you.
Exactly. The answer is yes, but Edmund, what do you think?
I think it depends on how progressive the insurer is. Most insurers that have built a big position in their markets have invested heavily in their own systems. So there's going to be a lot of inertia to suddenly say, you know what, I'm just going to use something totally new. I think there needs to be a way to ease, and maybe starting off with a partnership first, getting to know each other. It's just not likely to happen overnight for big insurers.
Well said from someone running partnerships. The any comment on that? Ergo's done some acquisitions.
I agree. I think a partnership is probably the first step.
The first step.
And it's also not to be underestimated what it takes to integrate in terms of an M&A,
And the
right?
cultural differences. Ladies and gentlemen, our session is finished today. A round of applause for our panelists.